So those numbers, deficit at up 42% in year on year in August. Could you kindly talk us through the numbers right there?
Yeah, good afternoon to you. Really, even though it sounds like the headline number is fairly horrific, they're kind of in line with what's been predicted in the Mauritian economy. Last year, we had a deficit of just around 73 billion rupees. This year, we're kind of forecasting 82 billion rupees. So this number is in line. You know that the drop is reflective of that, but it's really a tale of what's happening with the Mauritian economy and the way it interlocks with the global economy, with obviously exports falling as the main export market in Mauritius is Europe, and that's getting flat growth. So we're really reflecting that dynamic at the moment.
So the Mauritius economy really hitting a double whammy. We're also seeing the key imports of food and energy also keep on going up.
Well, that's exactly it. You know, it's two markets. We have the import market whereby we have to import our foodstuffs, and obviously that the price of fuel is going up and the price of basic foodstuffs rises every month. So there's a double whammy. That price increase has to be imported into the economy, and at the same time that the balance of the exports is falling away. So yeah, it's a complete double whammy at the moment.
What do you make of the currency right now? We did have the currency hit a 6-year high of 35.37 against the euro. That was in May, really hurting economic growth. We did have the Ministry of Finance also coming out and adjusting economic growth downwards.
Yeah, well, again, you have to look at the importers who are really looking for a fairly strong currency to keep their import costs low, and the exporters are obviously looking for a weaker currency and have actually historically enjoyed a weaker currency to make their exports cheaper. But again, you have to look at something like the euro dollar. You know, if you look at Mauritius, it's really locked into the European story. You know, when the euro dollar was around about 122, 123, you saw real strength in the Mauritian rupee, especially against the euro. And since the year, it's dropped 10% in value. So now we're coming round to around 40 euros, which is probably, you would say, a fairly equilibrium when it comes for the exporters. Obviously, they would like a weaker currency, but around 40, most exporters would be happy. It could still weaken further, but again, I think it's really going to be locked into the path of euro-dollar. If you see some kind of recovery in Europe, then again, you could see the Mauritian rupee weaken on the back of that.
With regards to the Mauritian rupee-dollar exchange rate, we obviously had some suggestions last week that the Ministry of Finance was looking to buy $100 million. What do you make of that and the desire to weaken the currency potentially against the dollar?
Yeah, well, it goes back to the same story. You obviously you have the politicians against the central bank. Now, the central bank's mandate really is to keep price stability. Now, at the same time, if you have a strong currency, it's going to hurt your economic growth, and I think that's really what the politicians are playing at. Whether they actually go through and buy this $100 million waits to be seen, but certainly the knee-jerk reaction has seen in the short term, weakening of the rupee up to around 31 against the dollar and 40 against the euro. But again, if the currency was weak in the previous, say, 12 to 24 months, then you could have seen a higher rate of inflation in Mauritius as prices rose, as we were forced to pay more for our goods.
And if you look at exporters right now in Mauritius, are we perhaps seeing a bit of a shift by exporters from Europe and looking to other markets here in Africa?
Well, I think you have, and I think obviously the European crisis hit everyone kind of sideways, and it does take time to turn around an economy. I think if you look at something like the tourism trade, whereby obviously Mauritius is still regarded as something of a luxury destination, very, very difficult at the moment to try and sell those kind of holidays into Europe, where again everyone's experiencing austerity. So you see the tourism industry is really kind of trying to re-aim itself at places like China and Asia, where there still is liquidity and there still is abundant growing wealth. And I think the actual exporters in Mauritius, certainly in the textiles industry, we're aware of, are looking into mainland Africa. You know, Mauritius is the gateway to Africa. We sell ourselves as that, and we really need to look at new markets in mainland Africa, and that is certainly going on at the moment.